Welcome to Stock Talk. Today we're jumping straight into Palantir Technologies.
That's right. Specifically, their Q1 2025 results. They just came out May 5th.
Yep, May 5th. And we're basing this on their official 8K filing and the press release they put out.
Standard sources, yeah.
So our mission today, pretty clear. Let's unpack the key numbers, the insights, and really figure out what this all means for Palantir going forward.
Sounds good. There's definitely a lot to talk about.
And hey, if you find this valuable as we go, please do like, share, leave a comment. It really helps us out.
Definitely appreciate the engagement.
Okay, so let's dive right in. Q1 2025 for Palantir. What's the big picture?
Well, the headline number that jumps out immediately is revenue, $884 million.
Okay, 884 million. How does that compare?
That's up a pretty substantial 39% compared to Q1 last year.
39% year over year. Wow.
Yeah, it's strong growth. And what's also interesting, I think, is the sequential growth. It's up 7% just from Q4 of 2024.
Right, that quarter over quarter number, 7%,
Yeah.
that often signals, good underlying momentum, doesn't it?
Exactly. It shows things are still accelerating, not just benefiting from an easy comparison to last year.
And it wasn't just the top line, right? Profitability looked pretty solid too.
Very solid. GAAP income from operations, $176 million. That's a 20% margin.
20% gap, okay.
And then the adjusted number, which a lot of analysts focus on, adjusted income from operations, was $391 million. That's a 44% margin.
44% adjusted margin. Those are really impressive efficiency numbers.
They really are. And it ties into this thing called the Rule of 40.
Ah, yes, the rule of 40. Remind us quickly.
Sure. You basically add the revenue growth rate, the 39%, and the adjusted operating margin, the 44%.
Okay, so 39 plus 44, that's 83.
Exactly. 83%. And the benchmark, sort of the minimum hurdle for a healthy software company balancing growth and profit, is 40%. So 83 is, well, it's way above that.
Significantly above. Shows a really strong combination of growth and profitability. What about cash flow?
Also looked very robust. Adjusted free cash flow came in at $370 million.
370 million. And the margin there.
42% margin on that. And maybe even more impressively, that's a 149% increase year over year.
Whoa, 149% jump in adjusted free cash flow.
Huge jump. Plus, they're sitting on a very comfortable pile of cash. $5.4 billion in cash, equivalents, and short-term securities.
Okay, so plenty of financial firepower, flexibility there.
Absolutely. And they seem to be putting it to work, or at least the underlying business is attracting customers. Customer count was up
How much?
39% year over year and 8% just in the last quarter.
So adding customers at a good clip, that makes sense given the revenue growth.
It does. And it's supported by the deals they're closing. They highlighted 139 deals worth at least $1 million,
Okay.
51 deals worth at least $5 million, and 31 deals of $10 million or more just in the quarter.
So not just small deals, but significant commitments from customers. That points to, real adoption at scale.
Definitely suggest that.
Now, one number that always comes up with Palantir is stock-based compensation, SBC. What did that look like?
Yeah, it's always watched closely. It was $155 million in Q1.
Okay, 155 million. As a percentage of revenue, what's that?
That works out to about 17.6% of revenue.
Mm-hmm. Still quite high. How should we think about that?
It is still a significant number, but the important context, I think, is that it has decreased as a percentage of revenue compared to, say, a year or two ago.
Okay, so the trend is downwards, percentage-wise.
Right. It suggests that as revenue scales up faster, the SBC isn't growing quite as fast, which means operating leverage is improving. Investors generally like to see that trend.
Got it. Okay, that makes sense. So let's maybe break down the performance. Where is this growth primarily coming from? Which segments are driving it?
Well, the standout, without a doubt, is U.S. commercial.
Okay, tell me about U.S. commercial.
Just exceptional growth, 71% year over year.
71%.
Yeah, and 19% growth just from Q4.
Yeah.
It hit $255 million in revenue for the quarter.
Wow. That segment seems to be absolutely firing on all cylinders.
It really does. And maybe the most striking thing they pointed out is that this segment now has an annual revenue run rate over $1 billion.
$1 billion run rate just for U.S. commercial. That's a huge milestone.
It is, especially considering where it was just a couple of years ago.
So what's behind that surge? What's driving the U.S. commercial success?
The company points heavily to their artificial intelligence platform, AIP.
AIP.
They position it as the sort of operating system connecting AI models to actual business operations, making AI useful day to day.
Okay.
And they also emphasize the success of things like their boot camps. These intensive workshops seem to be really effective at getting customers onboarded and seeing value quickly.
So it's the platform itself, AIP, plus these like go-to-market strategies like boot camps.
Seems to be that combination, yeah.
Yeah.
Plus just general new customer acquisition in that space. It looks like their focus there is really paying off.
And does the contract value reflect that?
Oh, absolutely. Total contract value, TCV, booked in U.S. commercial during Q1 was $810 million.
It's 810 million in one quarter.
Yep, a historical high for them. And that's up 183% year over year.
183% TCV growth. That's astronomical. What does that mean for the pipeline, like future revenue?
Well, it feeds into another metric they share, remaining deal value, or RDV. For U.S. commercial, that hit $2.32 billion,
$2.3 billion.
up 127% year over year, and up 30% just from the end of last quarter. So, yeah, it points to a very strong pipeline of already contracted revenue still to be recognized from U.S. commercial clients.
Okay, so U.S. commercial is clearly the star. What about the government side, U.S. government?
U.S. government also showed significant growth, not quite 71%, but still very strong.
What were the numbers?
$373 million in revenue. That's up 45% year over year and 9% sequentially from Q4.
45% year over year is still pretty impressive growth for a government segment.
It is. They attributed it to continued demand across, defense, intelligence, civilian agencies, mentioned expanded use of both their traditional Gotham platform and increasingly AIP is making inroads there too.
Okay, so solid growth in U.S. government as well. What about international?
International was a bit more mixed, more moderate, I'd say.
Moderate how?
Revenue was $256 million. That's up 12% year over year.
Okay, 12%. Still growth, but definitely slower than the U.S. segment.
All right. And actually, it was slightly down quarter over quarter. It now makes up about 29% of their total revenue.
Down from what it used to be.
Yeah, it was around 36% in Q1 last year. So you really see the shift happening, the increasing weight of the U.S. market, especially U.S. commercial, in their overall picture.
Interesting. So that raises questions about international strategy or maybe market dynamics there?
It does. Something to watch, definitely.
Okay, so zooming back out a bit. Strategically, what seems to be working so well, particularly driving that U.S. commercial boom, you mentioned AIP and boot camps.
Yeah, AIP is definitely positioned as the core growth engine.
Yeah.
They're really pushing this idea of it being the essential operating system for companies trying to actually use AI, not just talk about it.
Connecting AI to operations.
Exactly. And those boot camps and their AIP certification programs, they seem highly effective, not just for training, but for landing customers and, importantly, landing those larger deals we talked about.
So it's like an acquisition and upselling tool combined.
Appears that way, yeah. It gets people using it, seeing the potential, and then signing bigger contracts. And they're also having success expanding beyond just, the huge Fortune 500s or massive government agencies. They seem to be reaching a broader set of customers now.
Right. And I remember seeing a quote from the CEO, Alexander Karp.
Yeah, he framed it quite boldly, didn't he? Something about delivering the operating system for the modern enterprise in the era of AI.
That really sums up their ambition, I guess.
It does. And you see their strategies like land and expand, get in the door, then grow the account and acquire and scale seem to be clicking, especially in that commercial segment.
And are they still investing heavily in building out this tech? What about R&D spending?
Yep, still significant investment. $135 million spent on research and development in Q1.
Okay, $135 million. What's that as a share of revenue?
Works out to about 15% of revenue. So, yeah, they're continuing to funnel a good chunk of money back into developing the technology, which is, crucial for staying ahead.
Absolutely. Okay, so strong Q1 results, especially U.S. commercial. How did this impact their outlook, their guidance for the rest of 2025?
Well, as you'd expect, after a quarter like this, they raised their guidance pretty significantly.
Raised it. Okay, what are they projecting for Q2?
For Q2, they're guiding to revenue between $934 million and $938 million.
934 to 938 million. That implies continued sequential growth from Q1.
It does, yeah. Around 6% sequential growth at the midpoint. And adjusted income from operations for Q2, they're guiding to $401 million to $405 million.
Okay. But the really interesting part is usually the full year guidance update, right?
Exactly. And they made some pretty big upward revisions there.
All right. What are the key full year numbers we should focus on?
Okay, so full year 2025 revenue guidance is now $3.890 billion to $3.902 billion.
3.89 to 3.9 billion, roughly. What kind of annual growth is that?
That implies around 36% annual growth for the full year. a step up from previous expectations.
36%. Nice. What about that U.S. commercial piece? Did they guide specifically for that?
They did. And this number really stands out. They now expect U.S. commercial revenue to be in excess of $1.178 billion for the full year.
Over 1.178 billion. What does that imply for growth there?
That implies annual growth of 68% or potentially even higher for U.S. commercial.
Wow, 68% plus growth expected for the full year in U.S. commercial. That's projecting huge continued momentum.
It really is. It shows tremendous confidence in that segment. They also raised adjusted income from operations guidance for the year to $1.711 billion, $1.723 billion range.
Okay. And adjusted free cash flow.
Also up significantly, now expecting $1.6 billion to $1.8 billion for the full year.
1.6 to 1.8 billion in adjusted free cash flow. And are they still expecting to be profitable on a GAAP basis?
Yes, they reaffirmed their expectation to deliver GAAP operating income and GAAP net income in each quarter of 2025.
Okay, so sustained profitability alongside that accelerating growth, especially driven by U.S. commercial.
That seems to be the story. And they expect margins to continue expanding too. The full-year adjusted operating margin implied by the guidance is around 44%, up from about 40% last year.
44% adjusted op margin for the year. Okay, did they briefly touch on sort of risks and opportunities going forward?
They did, yeah.
Yeah.
Pretty standard stuff, but worth noting. Opportunities-wise, it's all about AI transformation in enterprises, expanding into the mid-market, potential for international to maybe catch up eventually, new industries, and ongoing government modernization.
Makes sense. And the risks.
The usual suspects, really. Intensifying competition, it's a hot space. Geopolitical uncertainty, which can always impact government contracts. Regulatory changes, customer concentration is sometimes a point of discussion. And just, the challenge of executing consistently on this commercial strategy.
Right, executing at this scale is always a challenge. Okay, so if we were to boil this all down, summarize this deep dive into Palantir's Q1, what are the absolute key takeaways for you?
Well, first, just exceptional overall Q1 performance. You can't ignore that 39% revenue growth and the very strong profitability, that 44% adjusted operating margin. Rule of 40 score of 83 is just outstanding.
Right, the headline numbers are strong.
Second, the absolute standout driver is U.S. commercial. That 71% growth, the billion-dollar run rate, that's the engine right now. Third, the significantly increased full-year guidance, especially that huge jump in the U.S. commercial revenue forecast, signals very strong confidence from management about the rest of the year.
Confidence seems high.
And finally, it really does seem to support CEO Karp's narrative about this tectonic shift towards AI adoption in enterprises and Palantir positioning itself right in the middle of that.
Yeah, the numbers seem to be backing up that vision, at least for now. They look really well positioned to ride this wave of demand for AI tools that actually, do something in a business.
That's certainly the impression these results give. Strong momentum, strong positioning.
So as we wrap up then, thinking about this deep dive, a final question maybe lingers. With this incredible acceleration, particularly in U.S. commercial, what might be the longer-term implications, for Palantir's place in the market, maybe even for the wider enterprise software landscape? What are your initial thoughts on that?
That's the big question, isn't it? Well, and it's still an if, but if they can sustain anything close to this commercial growth trajectory while maintaining profitability, it could really reshape their competitive position, challenging some of the much larger, more established enterprise software players in a way perhaps haven't before. It could signal a real shift.
Yeah, it definitely changes the narrative. It'll be absolutely fascinating to watch how that plays out over the next few quarters and years.
Sure.
Okay, well, thanks for walking through all that detail on Palantir's Q1 2025 results here on Stock Talk.
My pleasure. Lots to digest.
Absolutely. And to everyone listening, if you found this breakdown helpful, please do remember to like, share, and comment. Let us know your thoughts too. We really appreciate you tuning in.